It's about that time of day again, folks. Welcome back, welcome back. Happy Rebalancing Monday to everybody out there this morning. My name is Joseph James from School of Trade. I've got Marty Errico from Traders Audio here with me this morning, and we're going from the screen to the floor with a very unique and very useful morning prep for crude oil futures and natural gas futures. Once again, my name is Joseph, and I'm going to kickstart the call this morning with a top-down approach using charts. I'm a technical analyst. I live in Los Angeles, and I run a live trade room with students from all over the world every morning at 8 a.m. Eastern Time. And I'm going to provide us with a technical analysis approach, starting with a weekly, daily, and drilling all the way down to a 5-minute chart so that I can anticipate direction at the open and I'm looking for high percentage trading opportunities starting right at 8 a.m. So let's get started this morning looking at some anchor charts, and we're going to begin with the top-down approach looking at a weekly chart. Now, remember kids, we're not going to look at weekly charts very often. I like to look at weekly charts beginning of the week, end of the week, right? Just kind of give us an idea of what we're looking at going into this week ahead. Now, please remember a couple things this morning. First of all, it's Rebalancing Monday. That is the Monday following OPEX. That is where, of course, I'm sure Marty will discuss this as well. That's where traders who were negotiating positions going into OPEX now need to rebalance their portfolio coming out of OPEX. If you exited positions by Friday of last week, you're now going to be entering into new positions as you go into early in this week. With that said, we should also remind you that we're also trading the 7/13 contract this morning. We have rolled over to the July contract here. Now, if you recall, we began roll last week in the pit, but for all of us screen traders, we didn't see the volume exceed the 6/13 until yesterday evening. So please remember, Rebalancing Monday and also crude oil rollover here this morning. And what do we see here on our weekly chart? Well, if you recall from Friday, this weekly chart with this big candlestick wick, this weekly chart with a big candlestick wick is what told us that we should expect to see higher prices on Friday. And isn't that exactly what we got? So now this morning we come in and we open up a brand new weekly candle and we can see we got this little spinning top, right? Looks like a doji, right in the middle of its range right now. Now, it's tough to say exactly what a weekly chart's going to give us for intraday traders, right? For the most part, I'm an intraday trader. I am flat overnight. Now, if you're looking for major swing trades, multi-day trading opportunities, give me a call here in the office and we can discuss this a little bit differently. But for intraday trading, the weekly chart basically tells us we've closed at the high of last week's candle, almost laughing in the faces of the sellers, buyers bringing that price right back up. And now here this morning, what do we know? We know we have major resistance at the top of this wedge. We know we have a sell zone at 96, 97. Might as well call that 97 even. So what we know is we know that 97 even and where we are right now, right, that's the range of a sell zone now. So lots of resistance, lots of supply entering the market, pretty much right here where we are. Now, with all that supply entering the market at the highs of these range, that tells me these buyers are going to have to work for it if they want to make this higher high here today. If they want to close up in that 96, 97, they're going to have to work for it. Let's see what else we can find here as we drill down. The weekly chart tells us we're right in the middle of this week's range. It also tells us that trying to go higher could just be a very difficult challenge here this morning, especially on a Monday, without any major economic news. Look at the daily chart, and you can see here we have indeed tried to move higher this morning, and we have come off those highs here. On the daily chart confirms for us we are moving indeed lower here off these highs. 4-hour chart. Let's go one step faster. Here's a 4-hour chart, and now the 4-hour really starts to give us some levels we can use to trade today. Now, we know that crude oil's personality is pretty consistent. One of the things I always talk about in our training sessions, which we do every day in our live trade room, is that you've got to get to know the market's personality. Just like if you and I were to meet the first time, right? Let's say I met you down on the side of the street corner down the street, right? I wouldn't know your personality. How would I know what to expect out of you day to day? But if I met you for a few days in a row, if we had coffee, right? We'd We discuss current events, maybe some politics, right? I'll get to know you a little bit better, and I'll understand your personality. We know the personality of crude oil says that we are likely to move from 96.15 down to 95, right? We know the average daily ranges. We know the market's personality. That tells me right now that this price wedge is extremely important, but we know right away that it's be an easy target for us to hit 95 even. So this tells me that if price rises to 96.15, I will look for selling opportunities, selling short down to 95 even. I will take profit there, and I will look for a buying opportunity there as well. If it happens to blow right through it, I will have taken my profit at 95 even, and I'll look for a bounce off the lows of the wedge, and I will be looking for a W pattern to enter in at the lows. So what does the 4-hour chart tell us? The 4-hour chart shows us some two-sided trading opportunities. Does that line up with what we saw in the weeklies? Absolutely. Remember the weekly? The weekly chart, what do we see? We saw price right in the middle of its range, right in the middle of the weekly. We saw lots of resistance overhead. There's that resistance. There's that supply going to enter the market. And of course, nice and easy, we have a short term. This would be considered to be a bullish price wedge, right? So we got a price wedge. We're going to buy the lows and sell the highs of that wedge. We're going to sell 96.15. We're buying 95 even. And of course, if we can get down there, we will definitely be buying that 93.81. Now, these levels are going to be considered the most important multi-day levels. Let's now move down even faster. I want to drill down to a 60-minute, an hourly, a half an hour chart. Here's a 60-minute chart. And now in this 60-minute chart, this is where we start to really see levels we can use today. Remember, the anchor charts, starting with the weeklies, the dailies, the 4 hours, those are going to set the stage. They're going to tell the story. Now we start to drill down to hourly, half hourly, and I'm going to show you a 5-minute chart in just a few moments that's going to really give us the final clues we need to know exactly what levels we want to be trading with. Now, what are we seeing here? Short-term price wedge. Big clue. Huge clue. Short-term price wedge. What does that tell me, folks? A price wedge, when I see a price wedge on a short-term time frame, 60-minute, half an hour, 15, 5-minute, when I see a price wedge, I always talk about this in the trade room, I'm trying to think of the people behind the candlesticks. When I think of a price wedge, remember the price wedges, I'll take a price wedge for the rest of my career. When I think of a price wedge, I think of a bunch of 8-year-old kids trying not to be the first one to jump in that cold pool, right, or the cold ocean. I come from New England. Every December, every January, right, the old polar bears would jump into the frigid cold water. And whenever I see a price wedge, I always think about those guys jumping into that cold ocean water, right? In other words, nobody's too confident going in first, right? We're going to break out. You go first. No, please, I insist. You go first, right? No, you first, please, right? Nobody wants to be the first one to try to break new highs or new lows. What does that tell me? It tells me that the buyers and sellers, the people that make up the personality of this market, do not see value in higher or lower prices. Nothing wrong with that. Nothing wrong with that. Just means that we may have had something happen late last week. Oh, I don't know, options expiration. Think about it. If you've got options expiring and you're trading $100 million every afternoon, you're not going to be committing to any positions. Now we come into rebalancing Monday. There's no news on the calendar today. Without any major news on a Monday rebalancing, we still have no clues. Have we heard anything from London? Have we heard anything from Asia overnight? No, the week just got started. So the more we dig into this short-term price wedge says expect those fake out breakouts, right? Expect those traders to not want to be the one that tries to break this price out. Not until we get something to work with. Not until Bernanke sticks his foot in his mouth. Not until we get higher than expected news. Not until we get something that's going to give these traders something to speculate over. And that may not be until later on this morning, later on this week. We have a Monday, Tuesday this week without any major news. The week after OPEX week, traders getting back to their desks a little bit later. This is screaming two-sided trading. 96.23 makes for the best sell. 95 even makes for the best buy. One thing that stands out like a sore thumb is the wedge and the condition of the wedge. We are towards the edge of that wedge, right? If I can rhyme a little bit with you guys this morning. As we get closer to the edge, the narrowest point of that wedge, we do expect price to break out. I am not trading that breakout. I am going to look for the fake out breakout, W pattern at the lows, M pattern at the highs. I'll use our entry trigger indicators to know when to take the short or when to take the long. One thing is for darn sure right now, I've got to be very, very careful trading before I get higher or lower this morning. Moving forward, now we move down to a 30-minute. The 30-minute chart shows us a lot of the same stuff. We can see we have the sideways trading range. We can see we have some more short-term buying and sell zones above and below. I'm going to post these charts right on the blog for you guys so you can take a look at these. I will be buying these buy zones and selling these sell zones. Now keep an eye on that 95.35. I want you guys to remember that number, 95.35. All right? Got that remembered? 95.35. Now let's head back down to a 5-minute. This 5-minute is what I call my VIP. My VIP is very important price levels. Now, we've all been there before, guys. We do all this work on our charts, and all we get is a chart that's got too much stuff on it. So this chart is intended, I'm not going to trade off of this chart. This chart is used only to show me where the most important price levels are. Now, some important levels I want to discuss here first. What was that level we just talked about in the 30-minute? 95.35. 95.35 is the low of the London trading session. 95.35 is the low of day. It's the low of week. It's also the low of London. It is screaming at us if we get down to that low of day, 95.35 area, we will be looking to buy those lows. That is a huge clue. It is the weekly lows. It is the London lows. It is also the low of day today, and it is also the buy zone on the 30-minute chart. Okay, I'm looking for confluence now. I'm remembering the levels that I found on the slower time frames, and I'm moving them down lower onto my 5-minute. So when they all start lining up, when the stars align, that's when I know I've got my home run trade. As you can see here, the London trading session is very, very narrow. This narrow trading session tells me that we have plenty of room for this to jump. Now you'll notice we've tested our trigger zone. If we get a close below 95.59, I will expect price to test that low of day, and I will be looking to buy the lows. Once again, if we see price close below 95.59, I will not be selling short because my risk-reward ratio will not be there yet. But I will expect prices to test the lows of the range, and I will be buying those lows. As price goes lower, as you guys know, I am buying the reversal zone below. And a close below 95.22, and we will be selling short. I have a seller's target along with a pit session close or pit session low at 95 even. Wait a second, 95 even. There's another level we've heard before. 95 even is a big round number. 95 even is the pit low from Friday. 95 even is also, knowing crude oil's market personality, is also a selling target today. 95 even, where did we hear that from? That was the 4-hour chart. So we have some serious buying opportunities at 95.33, 95.35, right? And 95 even. Those are huge buy zones for me today. What about to the upside? Well, if we head to the upside, I know that I've got the high of day today, 96.08. Remember, we got a bunch of sell zones up there, 96.06, 96.31, right? We talked about this big round number of 96. One thing's for sure, though, we're probably going to end up getting up to that buy target up at 96.30, 96.35 area. Okay? We are probably going to see that target tested. I can't exactly tell us exactly when or if it will get there immediately, right? It's very likely here today that we get a couple of these 10 or 15 tick new higher highs, pulls back, 10 or 15 tick higher highs, pulls back, 10 or 15 tick higher high, right? It's probably going to make that what we call yo-yoing on the way up, right, or stair-stepping up. I might be wrong, of course, because we all know crude oil has a market, has a personality of its own sometimes. We do have a pit high, though, up at 96.40. 96.43, 96.45. Okay, there's another huge sell zone up top here. We got our buyer's target. A buyer's target is just as good as a seller opportunity. I will be looking for price to enter into this 96.35 area and bring it right back down in. Now we have to remember, we've seen nothing but two-sided trading today, two-sided market personality. We have to be aware that buying new higher highs is going to be dangerous today. So what I will be doing is, if I want to buy this thing long, I'm going to be buying pullbacks on the way up. And again, I do expect it as long as we do not get a close below 95.59. Price will test that 96.35 area, and I will be looking for a selling opportunity at those highs. I expect a grinding price going higher. Be careful on the buy on the way up. It will probably be a higher percentage trade here to wait for price to get and collapse and sell it back down in. Just like I said earlier, if we do head down to the low of day today or the 95 even, I will be buying those lows as well. So my plan today is to be careful buying up or selling down, but to be aggressive looking for those failures at 95, 95.35, and then 96, 96.35 up above us. Don't forget to use those London reversal zones. I will sell the reversal zones. I will sell the highs. I will buy those lows. And guys, I've taken up too much of your time here this morning. I want to thank you so much for being a part of this call today and listening to me and my humble opinion. I'm just a lonely old day trader here in Los Angeles. Now let's go across the continent. Let's listen to hear what Marty has to say and what Marty's seeing. Marty has his feet on the ground on the NYMEX exchange, and he's going to be talking to us today about what he sees live from the NYMEX floor. Marty, take it from here, my friend. Thanks for being here today.
No problem. Good morning, JJ. You hear me all right? You hear me okay?
No, we need to sound a little bit higher.
Just a little higher? All right.
Yep,
well,
much better.
All right, cool. So good morning to you guys. So what I got for you here is, boy, a lot of what JJ's saying, I'm kind of shaking my head as he's saying it here. I could expect a little bit of a fade off the highs. I am expecting a fade off the highs, and I'm expecting us to get down to 95 even. And then I think it's the buy from there. Now, last night I was talking to a group in our Traders Roundtable, and we were talking about, you know, the fact that crude, if we can stay below 98, we're going to be trading within this range, and we're not going to get anywhere, right? We're rolling over the levels from June on July contract. We're using continuous contracts. We're using all the information we need to be able to roll the proper levels from those June contracts over to July, right? So, you know, 95 even was at a very, very, very important level that we watched for now, what, 4 weeks now, JJ? So, I mean, it's been a very important level that we've been keeping our eyes on. And that 95 even is going to be not my line in the sand. It's actually going to be 94 even now. So 94 even up to 98 even. We're going to be sitting in this range, I can imagine, for the next, gosh, a couple weeks until we get a breakout. Hey, but if we get a breakout tomorrow, then we're not sitting in that range for a couple weeks. I was talking to a local just before. I was like, if we're not in that range, then we're out, you know. So we're going to be looking for a break of the range. I'm thinking we can get a nice buying opportunity at 95 even. If we cannot stay above 95 even, and we, like, just in the long term, if we can't stay above 95 even, and locals don't get their bid, and all of a sudden there's just a lot of some that comes in, they're going to start selling then. So really, we're looking for a fade short term, right? And then we're looking for buying opportunities off that fade. So what does fade mean? I'm looking for it to go lower right now, and then we're going to be looking for some buying opportunities. So right now, why do I say this? Okay, this morning I got crude trading here 95.52 in the in the July contract. I'm saying today's date. In the July contract. Open interest currently stands at 331,867. Implied volatility is at about 23%. The vol index is 23.25. Vol has been kind of getting offered out just a bit. There's lower volatility in the higher strike levels. Now, I know that's a bullish indication of vol today, but the open interest today is kind of a bearish indication just a bit. So you can play it either way you want. You can be fading and then buying, whatever makes you happy. The analysis points to, honestly, a little bit of a fade and then a bid. So I'll go selling first and then buying. So I look at the R bottom heating oil. They give us their indication as well. We're talking July contracts for the RBOB. I got 418 half. Oh no, wait. RBOB here 288.30s trading. 96,312 in the open interest. Implied volatility is just about 30.5%. Heating oil. July, of course, we're in July for all our products as well. So bear with me here. July 292.05 in the July heating oil. I'm looking at just 76,431 in open interest, which is bullish, and that vol is quite bullish too at 50.5%, 20.5%. So we want to continue to keep an eye on volatility. We want to continue to keep an eye on open interest this morning, see what kind of other indications we can get from these markets. I also like to pay attention here to that dollar index, right? That dollar index has been, we're going to get to the dollar in just a second, but I just want to talk about the dollar index real quick, holding levels above 84 even. So that's kind of promising. We'll get to that in just 1 second. So let's continue on by looking at our multiple market divergence. As we always start them off with the crude. We always start them off with the products. Now we're going to look at Brent. Brent crude here in the overnight session holding levels around 104 even. It did not break below 104 yet, so we're still 104.14. We were looking for 105 last night, and if we are going to break out to the upside, we need to see the 105. We need to see the crack values get up to 90. We're 89.72 right now, so just a few more ticks for that, for those crack values to get up to 90. The spreads, the June to July, the July front month calendar spreads. I got July Augie right now about 27 cents. July to SEP is just about 37 cents, and I got July to OC just about 21 cents. Our spreads are giving us somewhat of a mid-range indication this morning, as mid-range will trade within the range. Very simply put it. Again, that's what I see out of the spreads. The Brent WTI spread, a little tight right now, 831. I think it's going to be a longer-term indication to be a buy as the spread tightens up. Again, when the Brent WTI spread, when all these counter spreads tighten up, the market will be good to go higher. When it widens out and there's backwardation in the spread, the market will be good to go lower. So let's look at risk-on, risk-off sentiment real quick here this morning. Risk-on, risk-off sentiment not really giving us much here. We're looking at your dollar index this morning, and we're trying to see if we're going to have that inverted correlation with the dollar and currency differential, because what we like to look at is we like to look at supply-demand differentials. We like to look at currency differential, and then we also want to take a look at risk-on, risk-off sentiment. Right, so I got your euro. I got your dollar down about 50 points so far today. The euro up about 20 points. And we're looking at just your dollar fading just a little bit off the high prints that we formed on Fridays at the upper balance of the extreme. Again, the higher upper extreme of the balance here on the dollar is going to be up at 84.40. The lowers are now going to be 84 even. And if we can hold above this 84 even, this will be promising for us. Again, we're not used to seeing dollar higher moving with the crude, moving with the S&Ps. We're not used to seeing this dollar coming higher. It's a risk-off sentiment, but we're still giving the benefit of the doubt to the bulls, and we're still having that risk-on sentiment. So, unfortunately, here we're still going to have to bite our tongues and just watch what the dollar does here and the euro, because they're still attributing to 70% of our range that we form each day in the crude. You know. So we have to give respect to the bulls here and watch this dollar here, even though that's upticking. Still continue to watch crude. Still continue to watch the risk-on sentiment and the 70% correlation. The other's 30% supply and demand. So 70 to 30. We have to keep an eye on this again every day. That's what we look at. If you don't follow, let me know. All right, let's continue on here. We just wrapping this one up again here. We're wrapping it on up. We're going to talk about just some major levels here. And I just want to talk about also, besides major levels, some big options trades here in the pit. In the pit on Friday, obviously a lot of positioning balancing, so I'm not going to name every single strike level. I traded over 1,000 times because we were sitting here till 10 o'clock this morning. But basically what I saw was some big selling coming in from a lot of paper retail stuff, 97 half, 97 quarters, 97 evens. They kind of buy all those puts on those options. Again, I see a little bit of interest around the $100 level, 102 level. 101 to 102 Augie strike levels. They cover them down at 90 as well. We see the $90 level also being strengthened. But I just think that's large risk. Large money massaging risk around, and they're just placing, money in the 100 and money in the 90. The real value is, I believe, that 96 to 97 half call spread. They're really just kind of buying it recently, and we've been seeing a lot of that sideways gander chop within that call spread and the straddle. So we'll watch it. We'll keep our eyes on it here. I'll let you guys know large trades tomorrow that happen in the pit that we're really going to be watching for, because it's hard to keep track on OPEX. Everybody's doing it. It's crazy on those days. Pit's really wild when you guys hear it. All right, high 96.74, low 95.27, close and settle 96.29. Net change 14 cents from Friday, $1.47 range. Daily pivot today, please, 96.10. 96.10 is going to be your daily pivot today. We're looking at resistance above 96.93, 97.57, and 99.04. Levels of support down below, 95.46, 94.63, and 93.16. Again, guys, those are the levels straight from the trading floor. Have a wonderful day. Talk to you all tomorrow. Again, I'll see you guys tomorrow. Bye-bye.
All right, Marty, thanks so much, buddy. We appreciate, as always, you coming in and giving us your insight straight from the trading floor. Guys, we've got a bunch of opportunity here to sell that 96.45, and it looks like we have that higher prices just as we thought we might get here this morning after seeing price hold inside of that trigger zone. So as we close up shop here this morning, we have held above that 95.59. We do expect prices to grind their way higher here this morning. Again, I will be buying pullbacks. I will not be buying at those higher highs. So be careful out there this morning, and especially don't forget we do have a rebalancing Monday without any major news here. As always, thank you so much for being here today. My name is Joseph. I want to thank you guys for being a part of this call today. I'm from schooloftrade.com. That was Marty at tradersaudio.com. And we'll be here every day this week, Monday through Friday, 7:30 a.m. Eastern Time. We go from the screen to the floor, from Los Angeles to New York City, giving you guys what we think to be a very unique morning prep. Would you like to see anything else covered in our broadcast? You know, we're just getting these broadcasts kicked off the last few months, and we're always looking for feedback. Send us an email. Let us know what you guys like. Let us know what you guys don't like. Would you like to see something covered that we're not covering right now? We would love to hear from you. Go ahead and leave a post right on our blog, and I'll be putting all the charts up there shortly here this morning. Have a wonderful rebalancing Monday out there. Be careful, and don't forget, you got to learn it so you can earn it. We'll see you guys next time. Adios, amigos. Bye-bye for now.